Hey, greetings, Dr. Jeffrey Scott. This is my weekend market update for the week ending in Sunday, June 23rd, 2024. Uh, my email address is hgsidoc@gmail.com. I titled this week Rotation Out of Big Cap Tech or Something More Ominous. Will the junk off the bottom prop up the markets and prevent a sell-off, or will big cap tech pull us down? I think it's a legitimate question. I'm going to vote for the former, with the junk off the bottom keeping us from having a big correction. But I'll let the market do the talking and I'll react. But hopefully I'll be prepared whichever way it goes. As always, this is for educational purposes only. Okay, I'll make Anything I talk about should be taken in the spirit of education and not be considered investment advice. I'm a doctor, not a broker. I'm independent. I pay for the tools that I use. Nobody pays me to say good things about them or bad things about anybody else. I tell you what I think, and I show you the tools that I use in my daily trading. And trading involves risk, and you are solely responsible for any investment decisions you make. Special announcement. I've got some surgery coming up this coming week, and I'm probably going to be out of pocket for the next 2 weeks. So I doubt I'll do another video until either the Sunday before or after the upcoming Wealth 365 event. For those that like my short stocks and docs videos, probably not going to do much for the next 2 weeks there either. I'll answer any emails, respond to any comments, but it won't be as prompt as normal. But I'll be fine. Wealth 365 event, I'm speaking July 19th at 9 a.m. and I will put the link in the box for you to click on. It's no obligation. It costs no money. It helps me look good if you register using my link. I'd like to keep presenting there, and without having folks that click on my links, then that may not always happen. Appreciate Rob Hoffman and his staff for letting me participate. And again, I'll be doing it Friday, 9 o'clock before their trading competition. For those that don't know what the Stocks and Docs video is, it's something that I typically record late night or early morning. It's posted by the team at 7:30 to 8:30 in the morning, and it's a short video. It's designed to be 5 minutes. I can't stop at 5. It's typically 8:10, and when markets disrupted, could be 12 or 13 minutes. It's short, to the point, all chart driven, and no slides. Now, I do show slides on the weekend video because it allows me to pull from various programs quickly and get to the point, and I just do that to shorten the presentation or to keep it from getting ridiculous, which it probably already is. In yellow are the major markets. Yes, we had a holiday, but the program doesn't look back 4 days, it looks back 5 days. First thing is you could see all the major markets except for the Russell were up on the week. The Dow, sort of bouncing back up 1.20%. They're 2.4% off their all-time high. The NASDAQ was up less than 1%. The NYSE up 0.4. At least the Qs were up less than 0.1%. NASDAQ Composite were kind of flat, up 10%, 0.1%. You could see the major indices, except for the Russell, are not far off 52-week highs. Important thing to note is, unlike the others, the Russell's 52-week high is not an all-time high. So weekday on Friday on a better week than we've seen. Over 5-day performance led by discretionary financials and communication, which is different because the markets clearly have been led by healthcare of late, and for a while utilities, which I commented back then, it can never be good when utilities are the strongest industry group or sector. Now the Q-Edge tool gives me some belief that the market is stronger Saturday this week than it was last week. Now why would I say that? Despite the fact that the major indices could not get out of their way the last 2 days, 82% of the stocks were up, 58% of the industry, 82% of the sectors were up, 58% of the industry groups were up, and here 55% of stocks were up. And that combines Thursday's and Friday's activity. And you could see on some of this, such as industry groups and stocks, even stronger on Friday. Now, if you look at the week performance, over 5 days is weaker than the last two, which tells me the market got stronger into the weekend. And if you compare 10 days performance here, 91 down on the sectors, 68 down on the industry groups, 60% down on the stocks, we've had a significant improvement. And you can even look out at a month if you want to see some tough times in the markets. Up here just reviews Friday, 64% of sectors up, 66% of industry groups, 57% of stocks. Notice 7-4 winners versus losers from a sector perspective. Now, how does this jive with the prior slide? It's simple. This graph here is based upon the S&P 500, not graph, but the chart. Well, this is a broader based S&P 1500. And in weeks when the broader market may be outperforming the narrower market, then you're going to see differences here between the two different reports. Now, Market Breadth Q, a tool from my buddy Cigar Nandi, superiorprofit.co. Just a great program, runs in Metastock. The market breadth here, total view, is looking at the entire market, and I point out it has not been long ago that we had these blue arrows, which is a BANGO or irrational exuberance to the upside, some Hindenburg Omens signals, which just tell me that this is a market that's not without its fleas. If you look above and you look at on the top, stocks above the 50 in yellow, stocks above the 200 in white, they seem to be flat or trending down. If you look at the AD line, more below than above, same with the up-down volume. So breadth has not been outstanding on this run up. So are you going to get tired here because of a divergence? Now down below, this tells me going into the end of the week, growth eased off a bit and small caps started catching up to large caps for a couple days. But for the most part, over the last month or so, growth and large caps have led the markets. This here is my favorite 13-week new high, new low. Whenever it gets down here, you expect a bounce. No signal on the combined NYSE and S&P 1500. On the NASDAQ, you can see it's just above reversal line, and the NYSE actually got below the reversal line 10 days ago, and maybe that helped with some of the recent strength. Again, if we look at the different makeups, the Dow, the Russell, NASDAQ 100, S&P 1500, S&P 500, there is strength in this market. The NASDAQ 100, look at the 13-week new high, new low. It's getting to overbought versus the broader NASDAQ composite, which is right off of a reversal area. So there's a big difference in the market on the constituents. I use all these tools to help me make my impression of what the market will do. Then I have a weekly timing model. I don't really care if you're using TradeStation, TradingView, wealth charts. I can do my model in all of them. It's a simple model. It looks at price versus the 30-period WMA. It looks at a not so proprietary indicator. I tell everybody at Wealth 365 what's in it, called the BANGO, which is a momentum indicator and trending indicator, which I did with a number of colleagues over a decade ago. And when I'm on a weekly chart, if price is above the WMA 30 period and the weekly bongos green, I'm in a buy. Notice that all the markets went into a buy zone on or around November 6th of 2023. The spiders have never come out of the buy zone. The Qs had a little head fake in here and immediately went back into a buy zone. Right now, the Dow is giving me a sort of a yield sign, which tells me that the price is above, but the bond goes green. So this one could go either way. Probably going to go to the upside is my guess. And then the Russell is below the WMA with the red bongo. The Russell can't get out of its own way. You'll notice that each of these in this area here have had recent new highs, and the Russell can't even get back to the 2021, 2022 highs. Now, one of the things that did impress me in the market was looking at the equal weights. On top, I have the QQQE. The green and red straight lines are auto-generated trend lines. I like those. And then from a moving average perspective, the green one is a 17-day, the blue one is a 50, and the yellow, excuse me, the green is a 17, the yellow is a 50, and the red is a 200. The little blue here is something else. And what you could see is we sort of have a cup and a handle, but we haven't broken out. So this line here becomes interesting to me, that a breakout above that in the NASDAQ equal weight could lead to some significant moves and that thesis about junk off the bottom. And then you sort of have a series of triangles forming here on the RSP, the equal weight S&P 500. And to me, this is typically a continuation pattern, so I'm looking for this to break to the upside. No guarantees on either of these points, but would be very important for the bulls. This comes from Nick Drendel. It's a beautiful view of what the market is doing. You could see that small cap growth actually did okay, finishing up high, 94% of its range. Most everything else finished below their range. Even ARKK, even though negative, finished in the top part of its range. If we look at the major indices, they're back above their 50-day moving averages. If we look at one-day change, you could see big winner was biotech, cannabis, software, and I think biotech very much was driven by some really great news for Sarepta. What should concern you and what concerns me is the lack of new highs, and that on both the NYSE and the NASDAQ, there is a preponderance of new lows compared to new highs, and it's hard to see a major bull market in the setting of expanding new lows. So what happened underneath? This is the 10-year on the left yield. The right is the 30-year. You can see a little nubbing ticked up. So the rates ticked higher on the week, and I wonder if people are going to start to look towards the July FOMC meeting. Will the Fed save us? Will this be the last opportunity? Will they cut or raise in September before an election in November? I think if there's going to be a cut this year, the first cut should happen sooner than later, and this could be an important meeting. And we'll have we'll be very focused on what happens at that meeting. This week we have a bunch of Fed heads speaking, and so you wonder how much talking down the marker with higher for longer are we going to hear from them. Other question, and it seems in some ways inflation is taking a back seat to economic growth and activity. Is the market heading, or is the economy heading towards a recession? And if we are, what does that mean for the broader market? There's no question, if you look at the 10-2 and the 10-3 yield curve, when you invert below the zero line, which is the black line, when you come back above zero, you have gray bars. Those gray bars are the recessions. Every time you reverted, you had a recession. Someday we're going to cross back above it, but I see no evidence that that is anywhere near. Down in the lower left is a measure of credit risk, and you can see there isn't any. And on the right, you can see economic activity still above zero, and most recessions begin from minus 20. So, yeah, I think there's concern about slowdown. If the Fed doesn't loosen quick enough, that could accelerate a slowdown. But right now, we're not seeing a slowdown, and we're not seeing anything that says a recession is imminent. Market breadth. On the upper left is stocks above the 200, lower left stocks above the 40, and this is the 12-week new high, new low. The short-term 12-week new high, new low improved over the past week, and the other two were mostly flat. So I'd say breadth held mostly steady. And again, in this week, the broader markets actually slightly outperformed the high cap leaders. Now, one thing that still bothers me, and I'm not sure I care about the relative distance between these two, the blue being the NASDAQ composite, the yellow being the NASDAQ composite AD line. But you look at all of these, and the only one that I think is truly diverging where prices going up with lower advances to decliners is the NASDAQ composite. And that's something maybe to be concerned about. Buckets, well, the market improved. We're almost to a 50-50 state. There's no signal here. Now, those who've been around me for any length of time know that I'm fascinated by an old wives' tale signal called the Hindenburg Omen. I do not think it's an old wives' tale. It's classically measured on the NYSE. It matters what you're looking at. Are you looking at common? Are you looking at all comers? It's not a standard indicator in most packages. And all the work historically has been on the NYSE. What we do know is that every major correction has followed a confirmed Hindenburg Omen signal. To confirm it, you need two within 35 days. Many Hindenburg Omens, pretty much the majority, are modest pullbacks or maybe even a sideways market. So just because you see one does not mean the market must sell off. But I haven't seen one where the market just kept going higher and higher without any volatility. There's something to be concerning when I've got Hindenburg Omens on the NASDAQ, the NYSE common only, and the all NYSE. I gave a program, let me just give a little plug for that right now. I gave a training program and sales program for people who own TradeStation, TradingView, or Wealth Charts and wanted access to my specific tools for the various platforms. If you'd like a copy of that video, just send me an email to hdsidoc@gmail.com and say in the email, hey, I'd like a copy of your trading video. And yes, I recognize it's for education purposes only, and I'd be happy to share that with you. And I will honor the discounts offered to the live audience through the end of June. And then perhaps even more ominous is that one thing that bothered me about the peak in 22 was I had a lot of Hindenburg Omens on the NASDAQ, not as many on the NYSE, and I started doing a lot of work on the NASDAQ, and I think the NASDAQ is important. I think the Hindenburgs on the NASDAQ are just as meaningful. I presented that on YouTube about a month ago. It's somewhere out there in YouTube land. What I thought was interesting, this is just the NYSE, and it's not a end of the world chart pattern on either the daily or the weeklies. In fact, we're consolidating. But what I want to point out is we had two Hindenburgs on HDSI. Looks like one was Friday, one was Thursday. And we also triggered a Hindenburg Omen on the weekly. So when we did our program on Wednesday, we talked about how I was surprised that I didn't see it anywhere but Edge Rater. Well, I see them beyond Edge Rater. Markets. On the left is All Stocks 250 and 250K. On the right is S&P 1500. What's being plotted is performance on the y-axis. On the x-axis is ERG. ERG is a measurement of EPS rank plus relative strength rank plus group rank. And what I basically will say about this is that the gestalt is you cut off the head and you cut off the tail because the numbers are small. You look at the middle, and the stocks at the left have performed at least as good as the stocks on the right, which meant junk off the bottom were performing well. And there's no great pattern here on earnings, relative strength, demonstrating success, except on the S&P 1500. Some of the laggards with the lowest relative strength, by definition, the laggards actually outperformed on the week. News and earnings dates. This is a huge Fed head week. Expect them to say things about higher and longer, and if they think the market overreacted to Powell to the bullish case, then they're going to talk down the rally. And all we have to hear are more comments about the CPI and PPI are not enough to move them, higher for longer, and the market will probably face rough patches based upon the news. Beyond that, we got some typical stuff, new homes, jobless claims, but we also got something that we know the Fed watches closely, which is the PCE complex. I don't believe the Fed meeting, the Fed meeting is until the end of July, so we got a couple more weeks before they get together, or a little bit over a month. Earnings dates, I highlighted the ones that I thought would be most meaningful to me. FedEx, it's shipping, package delivery, but sort of a measurement on the economy. If the economy's rolling over, they would probably talk about it. Micron, computer memory, same thing. If computer industry is rolling over, if tech's in trouble, they might say something. Nike on the retail front, and then Bristol Myers Squibb um, in the healthcare, big pharma space. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So the thoughts are here. We did get gains except for the Russell on the week. Um, New highs on the S&P 500, new highs on the NASDAQ. Big volume on Friday, but it's option expiration. Markets were closed Wednesday. Gains were relatively broad. Interestingly, the RSP equal-weighted S&P 500 outperformed the cap-weighted S&P 500 1.2 versus 0.6%. We haven't seen that in a while. Market rotation evident as real estate, IT, utilities were alone in the red by the close. And you think about how much leadership information technology has been bringing. This should be an interesting week as we head towards the July 4th holiday and then the FOMC meeting at the end of July. Multiple talking Fed heads whose words may move the market. So my thoughts, market risk seems to be mixed here. On one hand, the multiple divergences and Hindenburg Omens suggest we see a significant correction here, but the markets have been resilient despite multiple bearish predictions by many folks. I think it's a good time to be prudent. I find it hard to not be long this market, but with the mixed signals, I still have cash on the side. My positions are smaller and my stops are tighter. Ian used to stress you need to know when to hold them and when to fold them. I will be quick to exit when I see the signals, but for now I am maintaining my longer stance with the caveats above. Leaders Index. This is something we've been doing for 25 years. When the market's at a peak, you find the leading stocks. You use a program like HDSI to create an artificial index, and when that index breaks, you know the market's in trouble. The list on the left are the stocks that we chose on June 9th at the Orange County meeting. And if you look at the chart, you could see, we have broken down below the 8-day EMA and actually traded below the 17-day, which starts to get concerning, but we also closed higher. So I think we're at an interesting point here. A breakdown below the 17 doesn't mean the rally's over, but it suggests we got a little bit bigger pullback coming. A break below the 200, I'm out of all these positions. Not that I would be holding all of them, but to me it's just an early warning group, and it tells me what I already know. The market's under pressure, but not yet broken. So now let's go take a look at the charts. Okay. So let's pull up wealth charts to start, and let's look at the spider over the week. So over the week on the spider, this is a 5-minute chart. Stock traded up Monday, went sideways most of the day on Tuesday. On Wednesday, gapped open. Wednesday was closed. Thursday, gapped open and traded down. Friday, it gapped down and traded sideways most of the session. So when you look at it, we're not a whole lot different than we were on Monday when we opened up. Not a rip-roaring market, but also not one totally collapsing. If we look at the daily charts, what you will see is that we had a bearish engulfing like candle over here on Thursday, down 0.27, and Friday we had a doji and we were down 0.18%. So just a small move on Friday, and certainly not a massive change or signal that the game is over. This rectangle is basically filling the previous gap. As long as we stay above that rectangle, I have to be bullish. If I look at the Qs, a similar story. They had an ugly candle here on Thursday, down 0.77. On Friday, not much happened. They were down 0.27, and I could say the exact same thing about the NASDAQ as the spider. One change was we had a big move up on the Dow, up 0.75 on Thursday, now comfortably above the 50, was down a teeny at 0.19. And the one that's struggling now is the Russell, which can't get back above this 50. Tough week in the market. You'd expect the UVXY to raise, and the UVXY is kind of flat, although it was up 1.27%. But on a $12 instrument, that's not very much. If you look at the dollar, my fear would be if we went back inside this very strong channel. We haven't yet, and that's what we're watching for. The dollar was up 0.2%, and that's could put pressure on commodities. So we do this right, not lose anything. Perfect. Speaking of commodities, with the dollar up, you expect gold and silver to be down. You can see that gold had a tough day, down 1.55, broke below the 50. Silver is staying above its 50, but it was down 3.6%. Oil, which had recently ran up, down 0.96. And then if you look at the 10-year here, it was actually up a little bit. But it, like the dollar, the 10-year has fallen through the channel. So both the dollar and the 10-year crept up a bit this week. Not the best of all news for the bulls. Look at the S&P 500 sectors hourly. This was, almost astounding on Thursday night, because the only thing that was pointing up was technology. Everything else was down. But look what happened on Friday. Yes, the indices did not have a great session, but look at how things compared to the spider. Materials improved, communications a lot, energy, financials, industrials, technology, no. Didn't see a whole lot on the staples. Real estate popped up, utilities a bit, discretionary popped up, and so did XLV healthcare. So what basically happened on Friday is, even though the spider itself struggled, we had a lot of rotation within the sectors, with some of the recent laggards moving higher. Now we'll look at the stock scanners, and I like to use the watch list to just look at some of the, not the watch list, rather the heat map, to look at some of the important names. So NVIDIA, which many people, myself included, I wonder if there's a reset chart. Remove all drawings. Yes. And then how about all right. When you have a split that's 10 to 1, the charts seem to get messed up a bit in every program. So NVIDIA, when it did its split back in here, I thought the market would actually pull back some, which other stocks have done, and it marks a short-term high. Well, it still ran up, but right now it's pulling back. We'll see if the 17, where it has a doji, can actually hold. So NVIDIA on Friday was down 3.22 after being down another 3.5 on Thursday. Apple, sort of flagging here. I don't know how much of this is just digesting a very big run, or how much of it is because the weighting in the XLK is likely to shift some people's portfolio as Apple reduces and NVIDIA increases. Broadcom, big gap up here. I don't expect it to fill the gap necessarily, but it's really coming down hard. Meta isn't in bad shape. It's sitting on top of the 17. We'll see what it does this coming week. AMD is kind of in a junky area. Tesla in between the 50 and the 200. And then a couple of the ones that I think look pretty decent. Amazon, and we may come back to it later, but Amazon's in a strong uptrend. Look at the weekly. It is pretty close, if not at all-time highs, where it's done a round trip let's flip this one to a monthly and just see what the monthly chart looks like. Here's the prior high, and in between here, besides a lot of healing, you had 20 to 1 split, I believe. Yes. If you look here, Amazon had a new EMS signal on great volume, 2 dots, relative strength OBV looked good, not extended, and it was up 1.6%. I think Amazon's a buy right here. And then Google is the other one of the FANG complex that I thought looked interesting. Nice uptrend, sideways move, big volume move on Friday, but don't be fooled. There was options expiration. Again, lots of volume, 3 dots coming out of a squeeze, not extended with strong RS and OBV. By the way, in that recording that I offered at hdsidoc@gmail.com, if you ask for it and remember, put a comment, we recognize this is for educational purposes only. In that video, I go over how I use relative strength and OBV and some of the settings that I use as well. Next question is, was this enough to flip the rankings in the market? It used to be very technology heavy, but on Thursday night we saw technology fall out, which was for the first time in a long time. So what comes up to the top? Well, first of all, let's get to nothing's above 800. That's concerning. Consumer discretionary, this has been in a downtrend. Is it breaking out here? Maybe. That's kind of interesting because that's where Amazon lives. XLV, not been one of the leaders up at the top. Millennial consumers, whatever that is. Communication, software, definitely saw that. Short bonds, or long bonds rather, short treasuries. Oil. So there has been huge rotation of technology out of the list of leaders. Is that healthy? Is that unhealthy? So now we have to start looking at different stocks. So I've got my CAT scan set up to look for my favorite setup, which is pullbacks and uptrends. I like $5 and 500,000. I have bullish dots that look at volume, breakouts, gaps, momentum, and the more dots, the better. I want at least one bullish dot, no bearish dots. If I'm going to buy something, I want it moving. Since I want this to have reversed, this shows me that the daily trend changed to bullish within the last 9 days. And at this time, both the daily and the weekly trend are bullish. So if I look at that and I look at, let's look at discretionary. See if anything pops up. So there's a lot of stocks here. So ADT is one that's on my watch list, and there's got to be a story to this stock that I don't know because this company's been around a long time, and it clearly came back hard. So what's happening? Well, the stock's moving higher, great volume, breakout momentum coming out of a squeeze. It's starting to get extended by math. I probably would be looking at this anyways. Relative strength and OBV look good. I don't see any news here. A little dividend back here. Earnings were a small beat. So I would do my homework, but I really like the pullback in an uptrend and then its breakout on lots of volume and some of my other signals. Hasbro was one I talked about last week, and I liked it with the break above the trend line. And so, as happens so often, you get a little bit of a pullback and a pennant formation, and then a breakout. Still like Hasbro. ABM, I don't even know what these guys do. I don't think I care. So I could always go into Trading View and put in ABM. ABM, hit enter. And what do they do? Oh, these guys that make brakes. Okay. So it's an industrial play. Target of 49. Well, that's a little bit late. But you could see a nice uptrend here in ABM. Seasonality, not anything great. Earnings, surprises to the upside, although not a lot of growth. Okay, not that exciting. Nike's got earnings this week, and I'm kind of reluctant to open positions right before earnings unless I know inside information. Fox Holdings is one I looked at on Wednesday, and it actually had a nice move on Thursday and Friday on good volume. 200 lags up ahead, but it's 20% higher. It had a launch indicator as well. Fox Holdings still looks good. Home Depot is Home Depot trying to break out in a setting where housing stocks are doing poor. And there's certainly they run together, but different businesses. That might be something to watch. Healthcare was another one that looked good. So let's look at healthcare has. And again, I'm looking specifically for pullbacks and uptrends. So Analam Pharmaceuticals had a Bible gap up on Friday on massive volume with a breakout momentum out of a recent squeeze. It's not overly extended with super strong relative strength in OBV. I don't like buying things below the 200. It's no longer below the 200. It's probably worth doing some research, but look at this. Buy rating to 400, 225, 234. The stock's at 165. So this one had a massive sell-off. Do your own research. I am just looking at technicals, but that looks interesting. Catalent, it's interesting. It's in a massive flag after a big run-up. Sarepta is the big winner on Friday. They had some positive news in their Duchenne's muscular dystrophy franchise, and you could see how the market responded. My guess is it goes higher. I think they're hard to follow. There are a lot of pharma stocks that are making the list. Gilead has had a recent reversal off the bottom. Is it getting too late to buy? I think so because it's almost 71 and 74.06 is the 200, and I like to see it get above that. Edwards Life Sciences, a device manufacturer, heart valves and other things, sideways move and a breakout from that from a squeeze. Volume and momentum break out the previous session, not extended. Relative strength at OBB looks good as well. So in summary, there are a lot of good looking stocks. This is not a display of all stocks that, believe it or not, I'm going to talk about something bad named NVIDIA, and it's not bad. NVIDIA is fine. If you own NVIDIA from 50 or 60, you probably are going to sit out and let it have its pullback and not get too upset. Would I enter a position here? I might when it goes above the high of that bar, but I think right now I want to see if NVIDIA does, and is it dead money for now, as my good friend and I talked about earlier today. Now, let's go look at the combo buyers buy list, which might bring up some other things we haven't talked about. And the beauty of the scanner here is it's pulling the kind of stocks I want to buy to the top. So this is a list of 1,000 stocks, and you're going to see a lot that we've seen, the first three. Coca-Cola Europe, it's in a slight uptrend. EMS signal, massive volume, 3 dots, relative strength not quite there. I think I mentioned Google. Google and Amazon will be my favorite FANG stocks right now going into this week. Just see if there's anything else here that I wanted to review. There are a few specific stocks, and let me call them out before I say goodbye. And it's not as bad as last week. It's at 38 minutes. All right. In the energy patch, XPro is a oil services stock. This stock, like many others, has recently sold off. It looks to me like it's breaking out here. It looks great on the weekly chart. It's got strong fundamentals, massive volume. Look at relative strength and OPV. It's got a high low of 86 and is not overly extended. NU may be one of my favorites of the week. Financial services, I believe, in Brazil. So huge uptrend, sideways move, a lot of congestion in a squeeze. But look at what happened on Thursday. It followed through on Friday on great volume. Relative strength and OBV look good, not extended. I like that. If you want a biotech potential buyout candidate, MIRM has some recent very positive data in liver disease. sometimes you got to be careful chasing these big volume moves. And you could see that we had a big move up on Monday, retraced most of that bar on Tuesday, and then Wednesday and Thursday and Friday actually traded higher. I like this, lots of volume, and when I looked at some of the news stories on this, pricing was high. I mean, let me see if I have to pull up TradingView because I don't see it here. And you could see in TradingView, let's open the news here. Here's somebody raised the target to 66 from 48. The price is at 32. But I've seen some really big price target increases because here's $71, $68, 57. Then 39 is the lowest, which would still be a 15, 18% move. So MIRM, a biotech buyout candidate on the basis of some really strong data. VRNS, I just like the stock pattern. I have no idea what they even do. Verona Systems. And what do I like? I like the fact it pulled back hard to the 200. It broke through the 50 on massive volume with breakout momentum. Relative strength and OBV look good. BXSL. This would be what I call a special situation stock. Why is it special situations? Well, first, I won't buy something special situations with a horrible chart. Uptrend pullback breaking out off of the 50 on massive volume with 3 dots. Great chart pattern. Relative strength and OBV are perking up. That's good. It pays a dividend of 9.5%. It's Blackstone Secondary Lending, BXSL. Two more, LAMR. They have a lot of the outdoor advertising. Lamar Advertising Company, they pay a 4.3%. I just like their pullback in an uptrend. Clearly in an uptrend, sideways move, and it just took out the 50 and the 17th simple moving average on Friday on massive volume with breakout momentum. Bongo just turned green. Relative strength is getting there. OBV looks good. And then the last one that I want to bring up is another biotech, ANAB. And I'm not putting this up for fundamental reasons. I'm putting it up because of chart pattern. Remember, I like pullbacks and uptrends. And here we go. We'll see. I'd probably wait till it gets above the high of this bar. But here's a stock that's all over the place. But you could certainly argue that that's a flagpole. And let me put in the line so it's there the next time I look. Somewhere up here you could probably argue is the top of the pennant, and a break above that might be interesting. So we've looked at a bunch of stocks, talked about the top down. I reviewed my concerns on the broader market, especially around the Hindenburg Omens. Look, what we're seeing here is a broadening of the markets at the expense of technology. If some money comes out of NVIDIA, Apple, Microsoft, and goes into the broader markets, I'm not sure that will be a bad thing for the long term. Hope you have an awesome week in the market. And again, just to remind you, don't look for, well, you can look, but you're probably not going to see a Sunday video. 100% not next week, and 50-50 on the following week. And then I should be back in the saddle again. Have an awesome, 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 awesome 4th of July, since I'm not going to talk to you before that. Reach out to me if you have any questions, thoughts, and if you want to see that video that I made, which is more of a sales video, I'll be honest, which is why it's not on YouTube and why I'm not pushing you that you have to get it. Have a great one, and thank you for your support. Remember, click subscribe, hit the alarm so you find out the next time I post.